Hello and welcome to Morningstar. To talk today about his 3 stock picks, I'm joined by James Sim, manager of the Schroder European Alpha Plus Fund. James, thanks for joining us.
Thanks, Holly.
So, 3 stock picks. Why don't you introduce us to your first one?
So I think the first stock I'd probably choose would be a financial, which is, I think, the last explicitly cheap area of the European market. And let's talk about Intesa. It's an Italian bank. It's the best Italian bank, very well run, pretty profitable. It's had a fantastic crisis. So it's emerged from the crisis with a strong balance sheet, and it's now able to put that to work. They're getting incredible growth in their asset management business, which is helping grow the top line as well. And so if I look at their business plan, which I think is pretty credible and doesn't rely on interest rates going up, now if that ever happened, they'd make even more money. By 2018, they're going to be paying out an 8% dividend yield. So it's not so high today, it's only about 3 and a bit percent, but by 2018 it's 8%. So we can buy that now, benefit from that dividend growth, and then enjoy an 8% dividend from there on.
So you say this is the best Italian bank, but of course most people thinking about the Italian financial sector might well have some concern there. Is it likely to be affected by potential cyclical movements within the sector?
Well, it's a bank, so it's clearly not immune, so we are taking that cyclical risk. The reason I say it's the best Italian bank is because it's the strongest capitalised and the most profitable. So if there is any turmoil, there's going to be many Popolari banks, for example, that are going to suffer first. These guys should be relatively more resilient. But the fact that there's those concerns is why it's so cheap and why we can buy it with an 8% dividend yield. If no one was worried about the Italian situation, the stock wouldn't be quite so cheap.
But you feel it's able to perhaps smooth out some volatility that you might see as a result of the sector?
I would say so, yes, but I am taking cyclical risk with that one.
So let's move on to your second stock then. What would that be?
Let's talk about Valeo. So this is a higher quality business perhaps than the banks. It's a company with a 5-year order book. They do the technology that goes into cars to help you save emissions. After VW is a very topical theme, isn't it? So the Valeo's technology, they do the stop-go technology, so your engine cuts out, that saves you about 16% of fuel. Regulators love that, for example. They also have some camera technology to help you park, and they're part of the journey towards autonomous driving. That's a journey that will take 20 or 30 years, but by 2030, 2040, the cars will be driving themselves, and Valeo will be a beneficiary of that. So you can see they've got some very clever technology, and they've got a big order book as well, and that order book goes out for 5 years. So I know pretty well what they're going to deliver. Again, it's cyclical because it's an auto supplier, so it supplies the autos industry, and for that reason it's pretty cheap. So for 20% a year earnings growth, that's my forecast over the next 5 years, it's only on about 12.5 times. Which is a very attractive multiple relative to the market for that type of growth, because it's a bit cyclical. So I would expect to get back to me every year as a shareholder. I'd expect it to hold that multiple at least, and I get back to me every year 20% earnings growth. So that would be my second stock pick.
So, just to take a look at the potential risks associated with this stock, is it that cyclicality that is the main concern? That's
right. If there's a big downturn in auto sales, then clearly Valeo will suffer, but they supply that industry. I think that's unlikely for a couple of reasons. Firstly, interest rates are at all-time lows. So as a consumer, we all buy cars on finance now because we'd much rather pay 200 quid a month than 10 grand up front. So and we can do that because interest rates are so much lower. So as a consumer, we're in a good place in terms of buying new cars. There's also demand for cars. So give you an example. Last year in Italy, there's about 30 million cars on the road and about 1 million cars were sold. That's telling you they're replacing their cars once every 30 years. Obviously, a totally unsustainable replacement rates. Cars do not last 30 years. So actually, we're at the point, particularly in Europe, Valeo have a big European business. They also have a smaller Chinese business. But in Europe in particular, you're getting this sort of catch-up demand from the crisis that we've had for the last 6 years. OK, let's move on then. Last but not least, your third stock pick. So my third stock pick, I'm going to choose Wienerberger, which is Vienna brick, Wiener being Vienna, obviously. And the reason I'm choosing this stock is because it encapsulates what is a large chunk of my fund, which is recovery potential. So in Europe over the last 6 years, as we know, we've been in a crisis. And there's still stocks I can find you as an investor in my fund that haven't yet factored in that recovery. So Wienerberger makes bricks. Bricks are used to build houses. Roughly in Europe, in the peak, we built 2 million homes. A woefully unsustainable number. Today, we build about 1 million homes. Also a woefully unsustainable number, but unsustainably low. In Europe, we need to build around about 1.5 million houses, so a 50% increase from where we are today. When I do a very simple back-of-the-envelope calculation for Wienerberger and what profit they might make if they sell 50% more bricks, which is very, very likely if this recovery comes through, I end up with the stock on about 3 or 4 times earnings. Now, it's not a brilliant business, so it probably deserves about 10 times earnings, but it's on 3. So that's a stock where I think I can maybe make 2 to 3 times my initial investment today. Well, we've already made 2 times our initial investment, but I think there's plenty more to go for. So that is a clear recovery stock within Europe, and we've got several of those in the portfolio, Wienerberger being one example.
Well, thanks for giving us 3 stocks there that are tied quite closely to 3 interesting industries: financials, technology and construction. Thanks for sharing those with us.
You're welcome, Holly. Thanks.
For Morningstar, I'm Holly Cook. Thanks for watching.